Hi guys, a very good morning and welcome to this live broadcast here on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira, and I'm here to take you through all those news and cues that can go on to impact your trading day. And well, it seems like it's a new week, so perhaps a new high in the offing is what we could expect. Let me quickly give you a recap of what went by last week, and of course it was that roller coaster of a week to say the least, where we did see that extreme action there on the Lal Street, but finally markets recording their biggest weekly gain in 2024 amidst all that volatility. Of course, we did see the sensex and Nifty gaining over 3% in trade last week and up almost 10% from that week's low, whereas the mid-cap index too surging about 13% from that week's low, and we did see that crashing on Tuesday after the counting day that it was. But we also can expect some bit of action from the PSU and PSU banking stocks, because those were the only underperformers, we would say, other than all the other sectoral indices which actually did register gains. This was perhaps that pain point that we're going to wait and see whether is it time to be exiting these PSUs or rather an opportunity to buy them now that they are, seeming more approachable or more opportunities in them. Or is it time to look at the defensive side and FMCG? Should that be a part of your portfolio? We'll be discussing all this and more with our experts. But before that, let me take you through all the top headlines. Now, Prime Minister Narendra Modi and 72 ministers took oath as the NDA government swore in for the third straight term. The new cabinet has about 30 ministers, including 5 berths for key NDA ally. Portfolio allocation, however, is still awaited. Wall Street managed to close lower on Friday following a stronger than expected jobs report for the month of May. This raises uncertainty over the timeline for the Fed's rate cut trajectory. Asian markets are largely lower this Monday morning. The GIFT Nifty is though suggesting a lower start even for the Indian equity market. Crude prices have posted their third straight week of losses, with Brent crude now trading under $80 a barrel. Gold, on the other hand, has also slipped by about 3% on Friday after a strong jobs report for May sees the Treasury yield surge. And to other developments across Europe, where France is set to go on polls as French President Emmanuel Macron calls for a snap elections. The president, whose term is only set to end in 2027, said he will dissolve the French parliament after suffering a heavy defeat in the Marine far-right National Rally Party in the European Union elections. There on your clocks, just about 10 minutes to go, and we'll get a new direction for the new week. Can we surpass those highs that we've crossed in the Nifty? 23,338. That's the number that we're circling around. Of course, we did close below that 23,300 levels on Friday, but of course we managed to overcome all of those losses that we saw on counting day. But let me also take you through quickly a couple of F&O cues that would give you a better idea of what we can expect from even the future and option side of trade, where if you look at the Nifty call option data, according to the weekly options, we're seeing 24,000 strike holding that maximum open interest, about 91.5 lakh contracts that was seen for the call option data, whereas on the put side there was a maximum open interest seen in the 23,000 strike, and that perhaps going to be acting at that support level, we could say, for the Nifty, about 56.21 lakh crore worth of contracts for that 23,000 strike. So if you look at the put call ratio, that one, which pretty much indicates the mood of the market, jumping to about 1.15 versus the 1.03. Above 1 does suggest that a bullish sentiment in the market. So that's where we are headed perhaps. If you look at the stocks in the F&O ban list, there are 3 of them that have been added by NSE. Balrampur Chini as well as Sigil is on that list for today. You also have Z Entertainment Enterprise, which is continued to be in this list. So 3 of those stocks that will be in the F&O ban, none of the stocks that have been removed so far. So these 3 will be on the F&O ban list for June 10th. If you look at the fund flows now, quite interesting what we're seeing there. We'll be discussing where really the FPIs and FIIs are headed. But if you look at the data of June 7th, the provisional data that is put out by NSE, FIIs were net buyers on June 7th, buying about 4,391 crore worth of shares in the equity market. Whereas the DIIs were the net sellers on this day, selling about 1,289.75 crore equity worth shares. Now, if you look at the volatility index, that one also, after seeing all of those swings all through last week, we did see this volatility index dropping considerably after hitting that 31 levels that we saw on June 4th. It is down to about 16.88 on June 7th. That's where it is. So this is, you can say, put the bulls in a little bit of more of a comfortable position, although it did rise up to by just about 0.49%. Now currently is sitting at 16.88%. So that's where we stand at with how the setup looks like for today. And like I was mentioning, both the Nifty as well as the Bank Nifty are pretty much poised there to be touching new highs, we would say. The Bank Nifty also hovering around those 50,000 levels, and whether it goes past it and which will be the components driving it there is going to be quite interesting to be talking about. And let me bring on board my guest then. Without further ado, I have Ajit Mishra. He's the Senior Vice President of Technical Research at Religare Broking. Good morning, Ajit. Always a pleasure to be speaking to you on Monday mornings. But give our viewers a sense of, what we're looking at the Nifty, that roller coaster ride that we saw last week. Do you think we are, almost out of the woods, we could say now? 2,000 points was that range that we saw, the swings that we saw all of last week. But and interestingly also, there were either gap ups or gap downs openings that we saw for the Nifty. What are the charts really providing this time? Are we rather to see another one of those gap up or gap downs today, or you think we are more into this consolidation mode now that we've fixed our place about 2300? So that's where we're going to be circling around. What are the charts saying?
Yeah, good morning, Stacy, and thank you for having me. So, Stacy, yes, it was indeed a roller coaster ride, extreme roller coaster ride, because we started the week with a bang, but the next day, market tanked sharply, engulfing the gain of last 5 months. And in the next 3 sessions, we are again back to the square around the record highs. So now the indications are still the same, that the kind of gradual recovery or momentum that we were seeing in the markets, maintaining since January, continuing in the coming days also. The good part is that now the sectors which were on the sidelines, Stacy, like IT, FMCG, they have started participating. So sectors like the rate sensitives, banking, auto, they have done exceptionally well in the past. So now I feel that the next leg, where IT still is down around 10 to 15% from their record highs, are going to fuel the rally or recovery or the upsurge in the index from here on. But the tone is likely to remain positive, but yes, it's going to be a gradual rise from here on also, is what the indications are. Upside 23,800, 24,000, that could be the probable targets positionally, and the tone should remain positive until we decisively break 22,600 marks. So it's a buy and dip market for the positional. Intraday also, I feel any dip towards 23,100 zone is an area where one can look for intraday buying also, with 23,400 to 600 being the positional target.
Right. What about the Bank Nifty, Ajit? Do you see any specific stocks that could be worth one's buy? And especially, after, if you look at it from the broader perspective, we did have the RBI also come out with a status quo policy on Friday. We also have them, cautioning about saying that there is that unsecured loans have moderated now, whereas the stance they've taken, or the regulatory overhaul that we saw when it came to NB NBFCs, that whole space also, now kind of seeing some bit of positive news flow, we could say. What about the whole financial pack? If you have to look at it, where should one be really, placing their bets at this point? Do you think there is more? And even the Bank Nifty index, do you think that it has a reasonable amount of entry points at this, we're already touching new highs and hovering around the 50,000 levels when it comes to the Bank Nifty also. So what would be your outlook on the Bank Nifty, the index, as well as components, be it, private sector banks or NBFCs? How should one be navigating that space?
So yes, in fact, it's been a good week for banking index also, because we could manage to make a new high in banking index. Broadly, it's trading in a channel, and we are trading closer to the upper band at the same. So 50,500, 51,000 is the upper band so far, and that's the area basically where we saw that the banking also resisted to cross. But the tone looks positive. There's no doubt about that, and the focus area should be specifically on the private banking majors, and the one which have been consistently doing well. So Axis and ICICI, these are the two names which are largely holding their positive tone. There was hardly any correction during this recent downturn also. So these are the top two names. From the NBFC basket, now we've started seeing fresh traction in Bajaj Finance after a long period of correction. So that may continue to attract, noticeable buying interest from every dip. And then lastly, Chola Finance, as a disclosure, we have recommended this to our clients also, which looks very strong on charts. So these are some of the names, but yes, PSU is something specifically that we recommend to avoid for a time being now, because, despite the overall positivity in the sectors, I doubt there will be any meaningful recovery in the PSU pack. So
Right.
private banking majors, largely the top performers and a couple of names in the NBFC basket is something that you should focus on. For the banking index specifically, from the levels point of view, 50,200 to 700 is what we are eyeing for the intraday being the hurdle. So look for any buying opportunity around 49,400 mark, with 48,900 being the stop.
Interesting. In fact, so stay away from PSUs, and in fact, we'll be talking about a little more in detail. PSU banking pack was the only one seeing that bit of negative sentiment all through last week, and those were the ones that really took it on the chin, we would say, when we did see that worst day on June 4th. But after that, we've seen some bit of recovery for certain, at least mid-cap PSU stocks, but the banking pack was still down and about. In fact, let me just, since we're talking about the financial space, it is interesting to see what we're coming across from how these different financial players, be it one of the recommendations that even Ajit had was Bajaj Finance, and how that has really seen some breakthroughs in these past few weeks. But there is also news coming in on Paytm and how that has really improved its business. In fact, on Friday we did see that stock really zoom almost 10%, touching that circuit filter, and this because the circuit filter was revised for Paytm from upwards from 5% to about 10%. So which is why Paytm did see that good up move, we could say. The company is also seeing some early signs of recovery after all of that trouble that it went through with RBI. They're seeing strong stabilization in their UPI business as well, which is really keeping it higher, and also analysts having now looking at the stock perhaps once again. But let's take you through what market opening cues are looking at. We are there almost closing on to those new highs, we could say, because 23,338 was that new high. So there we are at above those levels, so almost 0.3% of gain, but there 23,000 above 350, we could say at this point. So Nifty definitely touching that new all-time high or a fresh record there for the Nifty. Sensex also there above those 76,900 odd levels, so barely a few points away till we even get to the 77,000 marks perhaps. Bank Nifty also almost 0.5% of gain, and there we've managed to cross that 50,000 levels there even on the Bank Nifty. That index also positively propped up, we would say, over 0.5% of gains there coming in for the Bank Nifty. Even your mid cap and small cap index, so both your broader indices also seeing a good 0.5% of gains coming in there for your broader index as well. 53,500 levels for the mid cap index, whereas almost 1% of gain coming in for the BSE small cap. So we are quite positively, looking at most of our sectoral indices there, looking quite positive at this point. Let's look at who's really providing this kind of relief for the benchmarks and which are our gainers and losers. On your screen, Adani Ports, you have there almost 2.5% of gain coming in there for Adani Ports. And this perhaps there is a news flow on this counter which is really propping it up. Adani Enterprise stock may also see some gains coming in there after one of its subsidiaries has got an impressive cargo performance that has come in for AAHL, so that one really helping that counter. Power Grid also seeing almost closer to 2.25% of gain. So Power Grid, trucking along. Bajaj Auto from among the auto stocks is also seeing some positive momentum. You have Coal India and NTPC, so you have almost three of your PSUs there, power as well as coal stocks that are in the positive. Shriram Finance from your NBFC space is also making it to your gainers. So Adani Enterprise, like I was talking about, those stocks back in focus. Axis Bank as well as SBI that are seeing among your top gainers. Let's also look at the flip side then and see who's in the laggard list rather. At this point, there will be a couple of stocks that will be reacting to different news flows that are coming in. At least we'll be talking about the fact that a couple of auto stocks that will be in focus, especially after, if you look at Maruti Suzuki or Tata Motors or even Eicher Motors, they've seen a whole host of rating downgrades, at least in the past 3 months. What could perhaps be the reason behind them? Whether the sales have not really shown that kind of recovery. We'll have to talk about those in detail, but let me go back to Ajit quickly and ask him about the levels that he's seeing for the Nifty, at least at this point. Ajit, newer highs, how are you looking at it?
So yes, Stacy, in fact, we were anticipating there could be a flat start, but market has other plans, and with newer highs now, I feel that the tone looks positive, and for the intraday, again, I would say that one should wait for any dip, because the kind of surge that we've seen in the last 3 trading session is prudent, because the risk reward is not favorable at the current level. So any dip towards, let's say, 300 to 340 area for the intraday is the zone where one can look for fresh longs, with 270 being the stop. Upside 23,600 is what we are eyeing for the intraday.
Interesting. What about, we were just talking about auto stocks. Is there a particular thing that you can pinpoint out at why these so many rating downgrades that have come for the likes of Tata Motors or even a Maruti Suzuki, and what's happening in that pack? When it comes to sales numbers at the start of every month, we've seen some bit of growth, we would say, but is that not enough that analysts or brokerages are not really too sure about the auto pack at this point?
So it could be due to that, or plus we've already seen very strong performance from the auto pack. So in case if there'll be any lesser numbers expected, so that might dent the overall prospects, and that could be the reason why we are seeing these downgrades. But as of now, there is no indication price-wise that we are seeing in auto majors to slow down. In fact, M&M was among the top performing name in the Nifty last week, around 14% kind of a gains, and we are seeing a similar kind of traction in Bajaj Auto as well. The only stock which is slightly on the back foot post numbers was Tata Motors, and there also we have started seeing recovery. But at the same time, from the short-term point of view, be very selective, because we have already seen a very strong surge. So there could be a bit of a gyration in between, but the tone looks positive. Sectors which one should be focusing fresh should be now IT, FMCG and pharma, because there we still have room, as we discussed at the beginning. Auto being very selective now.
Right. In fact, since we talk about auto, there is, from the ancillary part of it, you can look at Samvardhana, Motherson. That one, Moody's has upgraded the company's long-term issuer rating to a Baa3 outlook with an stable outlook rather. So, maybe auto ancillaries could be an interesting play compared to the, bigger auto players at this point, which is quite, nice to see, because you'll at least have some pockets that will be reacting to, the news flows that are coming in. Interestingly, I'd also want to point out on a brokerage note that has come in on Bharti Airtel. Now, CLSA has put a note on Bharti Airtel with a buy call and the target of 1,540 rupees per share. And this remembers because the company has now entered that $100 billion market capitalization club. This is, of course, led by the success in its mobile business is what CLSA is looking at. They also see that how India now has just about 4 companies with that market cap of over $100 billion. And India's mobile industry, of course, is seeing that momentum and growth, which is also backed by the management's execution of driving this company. They say that the market cap had barely moved for the entire decade, but since 2017 has seen about a 3.3% or 3.3 times growth that you're seeing for the company. And the 3 drivers are high growth, scalable business, the strong management, as well as the global competitive edge that Bharti Airtel sees. That stock, though, not reacting to this news, the fact that it's reached that $100 billion club. But Ajit, quickly to you, how should one be looking at Bharti Airtel? That one also has been among your top gainers, for most of last week, but today seeing some bit of pressure, we would say. There is this news flow, though, that is looking quite positive for the company, at least the call that CLSA has on Bharti Airtel.
So, Stacy, it's among the best performing name, from the telecom space. And in fact, otherwise also, if you see from the performance-wise, price-wise performance, it's been a consistent performer with hardly any retracement during the corrective phase, and it's been maintaining a positive tone almost for the last 3 years now. The stock has been trading at the record highs, so I feel that the recent development have already discounted the price, but the tone looks positive. So, in fact, in case if we get any dip from the trading point of view around 1400, 1410 zone, in fact,
he mentioned that there is a good possibility, and why not to deviate from the RBI's principle of follow the Fed. I think I have taken this indication in a way that if at current interest rates, if market or economic or GDP continues to grow at 7.2%, is there a need to reduce interest rate? So it is quite possible that we may see that despite ECB reducing, despite, there might be outside chances that in July, Fed would reduce interest rates. RBI may not, reduce interest rates because the GDP growth continues to move higher. Now that doesn't make debt market very attractive, because yields, if you have seen, they have stabilized around 7% after showing initial dips. So yes, there can be some volatility over there, and it is interesting. Not necessarily you need to be there. Coming to equity, I believe that we are slightly stretched. If we remove what has happened in last 1 week, 7 days, 7-8 days probably, or 7-8 trading sessions, then market has actually not gone significantly higher or lower. There has been volatility. The best possible scenario that this government would have a thumping majority, that is still in the price, and that has not been the case. Nevertheless, the continuity is getting rewarded, but the pace of reforms may take backseat, and whether we are vocal about it or whether we are not vocal about it, we all agree to that the pace of reform in this coalition form would take, the pace would reduce slightly. Now, we are anticipating that there might be a cap to this market in near term. And it is very important to have sectoral churn in your portfolio depending upon what kind of portfolio you have. When I say that the pace of reform is going to reduce, I am not expecting that equity market is going to tank or there would be end of bull run or something. Just that not everything is going to go up. It's going to be selective market. You would see that indices might not give you a big headroom, but then there will be a lot of stocks where you can, or sectors where you can position yourself accordingly.
Let's talk about PSU stocks. Now, if you look at last week, of course, those were the ones that really, got badgered. We would say the fact that PSU banking stocks also were among the, big losers, and that a particular pack was the one that was the only negative, even though we saw the recovery among other stocks. Now, in this whole space, do you think there is still some room for the PSU banking lot? And if not banking among them, what in the PSU pack do you think that there is still value at this point? Or do you think it is, time to be just waiting on the sidelines, let at least the government or let even the budget go by, and then maybe PSUs might look interesting again?
Well, it's an interesting question, and good, you're adding the budget aspect of it as well. My point over here is you mentioned that PSU stocks and especially banking stocks took the beating because you're seeing it from, a very shorter term perspective. But if I look back, what has happened in last 6 months or 1 year, there has been a huge rally in PSU stocks, irrespective of, people checking whether the credit offtake is happening accordingly, how is the growth, how banks are managing, what are the NIMs, barring SBI and Bank of Baroda. Market has not done a proper research on these PSU names. I understand the quality of assets, at least on the books right now, is not very bad, and the provisions have also been done. Valuations are not cheap. I am not expecting mid-cap PSU banks to do pretty well. When I say pretty well, I'm not expecting that up move which they have seen to continue. What I would place my bets on if I am a long-term investor, then SBI has shown that it is growing at a good pace, and I'm not talking about prices, but how the trade offtake, the quality of assets, how the bank is getting managed. And there is consistency and continuity in SBI. So there is no brainer that if one has to take exposure in PSU banks, whether it is based on fundamentals, whether it is based on sentiments of this government, it should be SBI. And probably if you want to trickle down a bit below, then Bank of Baroda is other name. Other names outside these two names, I won't suggest. As far as banking pack, the entire banking pack is to be seen, then HDFC Bank has seen huge amount of consolidation after the merger. Stock has not done well since last 3 years, I would say. It has been a range bound stock, and now we are seeing that there is some sort of buying emerging. Valuations are not as expensive as it used to be when HDFC Bank used to have highest NIMs. Now even ICICI Bank, Axis Bank are doing fairly well. In fact, ICICI Bank is trading at premium to HDFC Bank. So you can have some exposure in some of the private names also. But since your question was on PSU, SBI and Bank of Baroda.
Interesting. SBI, Bank of Baroda among the PSU banking names. In fact, another PSU pocket that was quite interesting in this run-up to the election was the whole railway stocks. And now, there is buzz that, there are demands from Bihar coming in that they would want the railway ministry, and JDU being that, a push for getting that ministry. So it will be interesting to see how that really turns out. Remember, portfolios haven't been allocated yet, and there will be that kind of pressure from all allies, in fact, for the NDA. But let's also bring to focus, a couple of news points that have come out from the railway stocks. Now, if you look at Railtel, that one has bagged an order of about 81 crore rupees from the National Informatics Center. This is quite interesting, and we've seen that stock also react in that positive. You also had RVNL, which closed quite in the positive on Friday. This after this one has secured a deal by NTPC and for about 495 crore rupees. According to this deal, the contract is so that RVNL will be executing the balance civil as well as HM works of a barrage complex, and this for the Ramnam hydroelectric project in their stage 3. The stocks saw that good up move on Friday and is continuing propped up. You can see there on your screens about nearing 1.5% of gain coming in there. Ajit, to you quickly, how should one be looking at railway stocks now with the news flow, of course, is there behind it. You still have, to see the outcome of the budget and whether there will be a separate allocation made towards this. But if you have to look at particular stocks within railway PSUs, what would be on your list if you have to look at them?
So Stacy, as you rightly mentioned that most of the names they have done exceptionally well in the recent weeks, in the recent months, and now we are seeing a bit of a profit taking the higher levels, and which is natural considering that they have almost risen 8 times, 10 times in the last 1 year's low. And now I feel that among the basket, IRCTC is the only name which is left, which didn't participate much. Though post numbers, we saw some correction also in the stock. But now we are seeing gradual recovery from the long-term averages. So we feel that IRCTC could be one stock which one can look for accumulation. So 950,000, that should be the zone where one can look for accumulation IRCTC. And positionally, we can eye newer highs or maybe first 1100 first and then around 1200, 1250 levels. So this is the only stocks from the PSU railway basket which looks okay to us. Railtel, yes. It might continue to consolidate and we still have more room on the upside, but comparatively from the risk reward perspective, I feel IRCTC is a better candidate.
Right. So risk reward perspective, IRCTC faring, positively there. So maybe you could look at that counter. And, I want to go back to Siddarth and speak to him about OMCs. Now, it's quite interesting because there's lots of news flow about whether, the new government would want to bring fuel under GST. Is that something that we could hear about? But if you have to look at how OMCs have performed so far, they've also seen some good swings. And in fact, today, if you have to look at crude, what is happening there, we are trading at below $80 a barrel. In fact, even Morgan Stanley has come out with a note on OMCs, and they say that integrated margins that they are tracking could be approximately 20 to 30% above that mid-cycle. They're also saying this should lead to a restart of that earnings upgrade for these particular stocks. They see that refining margins are recovering at this point, and they could be that potential restart of that daily pricing mechanism also, which could go on to provide that multiple upside. Do you have a similar views, Siddarth? Do you think that OMCs are well placed at this point, and there could be stocks that look good to you? Are there any? Do you have any OMCs that you would want to look at, and why?
So I would, suggest participants to understand that whenever people comment about any company and how, margins would improve, how, earnings might go higher, that and stock prices are two different things. I mean, if you realize that there has not been much of change in fuel prices at retail level, and there was time when there was a substantial rise in crude oil prices and OMCs were underperforming. Now, yes, crude oil prices have come down. They are stabilizing around $80 per barrel, which is a decent place to be. But because there was so much of fervor of PSUs doing well, all these OMCs, despite crude being higher, despite retail fuel prices not changing much, have run up significantly. So yes, I agree with all those statements you made that GRMs are going to improve. We are going to see upward, on profitability front. But does that or will that result into stock prices going substantially higher? I think valuations are fair. I am not expecting significant upside in OMCs because crude oil price are ranging around 80. Yes, if they move towards $70. Then probably one may again think of whether and fuel price at retail level also maintained at current levels. Then probably I would reassess them. But at this juncture, I would suggest that this is not the space to be.
Right. Interesting. Ajit, one last question to you on new age tech stocks. We could say there are a couple of brokerage notes that have come out on Zomato, not so much in the positive because there's going on to cut a couple of their FY 25 and 26 earning estimate because they're saying that maybe the margins from Blinkit might not look as what they were looking at. How should one be looking at Zomato? There's also a note on delivery, but if you could tell us what the charts are are for Zomato. Somewhere around 100 is the price target that has been put by this brokerage. But what can we say for Zomato at this point, or new age tech stocks if you look at it from a broader perspective, but this one on the charts?
In fact, Stacy, from the entire space, Zomato, if I'm not wrong, is the only stock which could reclaim its, IPO's high. I doubt that there'll be any major underperformance based on, the short-term projections and all. But broadly, yes, we have seen a very sharp, steady up move in the stock, and it is normal that we see some correction, consolidation after a phenomenal run, almost like 3 times, 4 times from the record lows. So, from the short to medium term, I feel it's still a buy on dip candidate. Closer to around 170-60 zone is an area where one can look for impact entering into the stock. And it's going to be a healthy correction by that time. And again, newer highs close to around 210, 215 is something that one can look forward to in next 2 to 3 months. Apart from Zomato, Policy Bazaar is also looking interesting to us, and Nykaa. So Policy Bazaar, again, like the second stock from that list of new age company, which has done comparatively well in the last 6 months. And we feel that there's more uplift to this current recovery. Nykaa, though, is still struggling, around the recent lows, but the kind of price action that we are seeing from last 6-8 months, the downside seems capped in the current level. So, in case if somebody is stuck at the high level, they may continue to hold. But rest of the names like Paytm and delivery, they might continue to struggle at least for a time being now, though we continue to see some reaction, positive reaction on some news item and all. But the trend has not reversed for any of these names. So for a time being now, stick with the top performers.
To stick with the top performers, maybe Zomato might be there, although Macquarie is not giving it such a thumbs up. They have, in fact, gone on to cut their price target for the discounted cash flows by about 4% to 100 rupees per share. But quite interesting. Last word with Siddarth. Siddarth, what are the sectors that you would pick in this new innings? Now that we have the government gone by, of course, we are going to be waiting for the budget. But that aside, that uncertainty aside, which are the sectors that you think are going to be those outperformers for FY25?
It was interesting to see that just after election results, most of the broking firms jumped to revise their estimates on HUL because rural consumption would increase. Also, if I club this with what Governor mentioned in the RBI meet, that above normal monsoon plus good buffer stock of wheat and other pulses, other cereals, suggests that inflation may remain under check. This is going to boost consumption in rural economy. And 2 sectors which we are liking based on these premises are FMCG, of course, and also auto space. In fact, today we have come out with a coverage on Bajaj Auto. Stock seems to show continuity and may continue to show its higher growth trajectory, both backed by domestic and export growth story. So that stock is looking attractive to us. In FMCG space, some of the blue chip names are available or were available because they have shown substantial amount of run up. And in your last time when I was on your show, I mentioned that HUL is available at a 7-year low PE. In fact, it was sub 50 PE, though it is slightly higher now because of the run up it has shown. Still, FMCG space and auto space are backed by earnings, are not very expensive. IT is other name where I have been quite vocal since quite some time that though there is uncertainty related to what would happen in US, but valuations are not expensive, and with overall market being at higher levels and valuations not being cheap, you mentioned in your opening remark about FI's concern, China probably showing signs of some improvement. There would be some fund allocation towards the defensive space. and all names except auto, which I took, are defensive in nature and also has valuation support. So this is the space we would like to allocate more of our funds.
Interesting. So FMCG is definitely something that is, having a lot of interest, at least in this last week that we saw them, really being those outperformers among this volatility. That's where you could find good pockets of interest within the FMCG space. Autos also something that Siddarth is pointing out could see, and for him the contra call, we would rather say, is within the IT pack, given all the uncertainties from the external headwinds that could occur. That could be quite interesting. Ajit, let me get a last word from you. Also, there's one query coming in on Lind India, the Bosch company. What are the charts really looking at? Raj Nelani wants to know your view on that, and also if you have any other picks or recommendations for our viewers, what would those be?
So India, it's not a stock where one should look for short-term trading opportunities, because volume-wise, the price action, the volume remains subdued largely. During the updates, we generally see strong traction. So if your view is long-term, you should definitely stay put. Though it's a highly volatile stock, nowadays we have started seeing, sharp swings. So 7,500 is the new base now from the short to medium term perspective. Until we close below this mark, you can stay put with 10,000 and maybe higher as your positional target. From the recommendation point of view, we have already discussed about Bharti Airtel, and it looks interesting to me. And I feel that one can in fact look at fresh buying also in Bharti Airtel with 1390 as a stop and 1495 in the target area. And the stock which have not participated much in the auto run-up so far, Tata Motors, there also we are seeing recovery now. And it might catch up, in line with what we are seeing in the other automakers. So 1,005 is what we are eyeing in Tata Motors. So one can go long in Tata Motors also with 954 as a stop.
Quite interesting picks there. You have Bharti Airtel, which has entered that $100 billion club, and also Tata Motors. Well, completely out of time. So let me thank both my guests, Ajit Mishra from Religare as well as Siddarth Bhamre of Asit Mehta Investments. Thank you so much, gentlemen, for giving us your time, speaking, helping our viewers with their queries, as well as giving us perspective on how we should be going about in this market from here on. Well, but we're completely out of time, but I'll be back here tomorrow morning with more, stocks that you could keep on your radar, as well as to remind our viewers that do keep sending us your queries, because that's where, we like to understand where the interest is, where the buying, or which stocks could perhaps, be something that you would want to get your price targets or, your stop losses on. That's something that we would like to have addressed on the show, but completely out of time here. But from the whole team that puts this together, big thank you for tuning in every morning. Also, do keep sending us your feedback in the comment section below, and follow us on the link at the bottom of your screen. Subscribe to Moneycontrol, and for all your other updates, you're going to get them on moneycontrol.com as well as the Moneycontrol app. I'll be back here tomorrow morning.